Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into Petros Pharmaceuticals' latest report, and let me tell you, it's a roller coaster. It's got delisting warnings, stock dilutions, and enough corporate maneuvering to make your head spin. So buckle up because we're about to untangle this mess. This is a Form 8K filing which companies use to report major events to the Securities and Exchange Commission. Think of it as an RO. Report when something important happens that investors need to know about immediately. This one was filed in April of 2025. The big news here is that Petros Pharmaceuticals is facing potential delisting from the Nasdaq stock market. That's like getting kicked out of the Cool Kids Club for stocks. They didn't meet the minimum requirements for the value of their company stock owned by shareholders. They're appealing, which means they're trying to fight it and stay listed, but it's not a great sign when your stock is in danger of being delisted. There have been changes to the rights of the company's security holders, which are the people who own stock in the company. This change relates to an amendment or update that was made to the company's incentive plan. It had to do with stock and other incentives. The company stockholders approved an amendment to their incentive plan. The amendment increased the amount of common stock available for stock options by a huge amount, 1 billion shares. This means company executives could receive a lot more stock as part of their compensation packages. If you want even more details, you can check out the company's proxy statement filed in March of 2025. A proxy statement is a document companies send to shareholders before a meeting so they can make informed votes. Stockholders also gave the thumbs up to an amendment to the company's certificate of incorporation. This is a fancy term for saying they increased the total number of authorized shares of common stock from 250 million to a whopping 7 billion. That's a massive increase, and it can have significant consequences. The company held a special meeting of stockholders in April of 2025. At this meeting, several important proposals were put to a vote and approved. Let's break down what those proposals were. One of the approvals was related to issuing shares of common stock for some warrants called Series A and Series B warrants. These warrants were issued in a public offering in February of 2025. Basically, the company needed stockholder approval to issue more shares related to these warrants, including an enormous amount related to something called anti-dilution provisions. Anti-dilution provisions protect warrant holders from losing value if the company issues more shares at a lower price in the future. This results in over 1 billion extra shares. The vote was approved with about 4.5 million votes in favor, about 723,000 against, and around 113,000 abstaining. The stockholders also approved a reverse stock split. This means the company will reduce the number of outstanding shares of its stock, but the overall value of the company should stay the same. Imagine cutting a pizza into fewer but bigger slices. The reverse split will be at a ratio between 500, meaning for every 250 to 500 shares you own, you'll end up with just one. Companies do this to increase their stock price and avoid being delisted. This was overwhelmingly approved with about 14.6 million votes for it, 1 million against and about 254,000 abstaining. Remember that incentive plan amendment we talked about earlier? The stockholders also formally approved it at this meeting. The plan increases the number of shares available for employee compensation by 1 billion, bringing the total to over 1 billion shares. This was also approved. There were about 12 million votes for it, about 744,000 against, and around 103,000 abstaining. And finally, the stockholders approved increasing the number of authorized shares of common stock from 250 million to 7 billion. This is the amendment we talked about earlier. Again, approved. There were about 12 million votes for it, about 719,000 against, and around 120,000 abstaining. There are also some exhibits attached to the filing, including the actual amendment to the Certificate of Incorporation, which increased the number of authorized shares, and the third amendment to the Petros Pharmaceuticals incentive plan. Now let's step back and look at the bigger picture here. This filing paints a picture of a company in trouble. The delisting notice is a serious concern, and the company is trying to fix this with all these measures. The reverse stock split, issuing more shares, and increasing authorized shares are all moves that companies make when they're struggling. Issuing a ton of new shares and increasing the number of authorized shares can severely dilute the value of existing shares, meaning each share is worth lesser. On the other hand, all these measures give the company more flexibility in the future. Overall, things don't look great for Petros Pharmaceuticals. The company is in a tough spot, and these moves, while necessary, come with significant risks for current shareholders. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more insights into the world of corporate filings. Until next time.